how to stop sabotaging your financial success. There's a saying that success leaves clues. And, at Practical Wealth, hi, I'm Curtis May, Practical Wealth Advisor, Money for Life Guide. And so we're going to talk about uh, I've adapted this from the five laws of gold from the richest man in Babylon. So really, I want to start bringing this out because too many people think that they have to invest, are always looking for better investments that pay a higher rate of return, chasing returns. And the only way to do that is to take more risks. So I want to back you guys up and help you just understand the principles that lead to the acquisition of wealth. And so this is adapted from the five laws of gold. So let me just pull this out here. And so here is I'm going to start with this premise, right? So this is from Arcad and the Richest Man in Babylon. It says, if you have not acquired more than a bare existence since we were youths, it is because you have either failed to learn the laws that govern the building of wealth, or you do not observe them. So think about this. If you are making, I did this, matter of fact, I'm going to redo this in another slide, but if you're going to make millions of dollars in your lifetime, okay, millions, okay. And like if you make $100,000 a year, over the next, not adjusted for inflation, you're going to earn $500,000. Okay. Over 10 years, $1.2 million. So, but there's a saying, it's not what you earn, it is what you keep. So keep that in mind. Okay. And so the two core principles, so I teach the five principles of personal finance. Our framework at Practical Wealth is principles drive strategy. Okay. Strategy drives tactics. Tactics are last. Tactics are, for example, financial products you may buy to implement the strategy. So, we teach infinite banking, but what I'm going to show you now, even precedes that, right? So the first one is, Nelson Nash will call it, you got to whip Parkinson's law, right? That says expenses rise and meet income. And so in The Richest Man in Babylon, he says it this: part of all you earn is yours to keep. So you have to pay yourself first. So out of that $100,000, could you save 15% or 15,000 of that? So you have to figure out some number. We say 10, 15, or 20%. And the other thing is you have to spend less than you earn. So I'm gonna let those two so I'm gonna let those two things sink in, because if you can't do this, we don't have nothing to talk about. All right. And so that's the game. Everybody wants to, because you're always chasing returns because you feel like you've got to outrun your money mistakes, but you can't fill up a bucket if it's got holes in the bottom. And most of us have leaky financial buckets. Okay. And so in the things that I see, for example, among ordinary people speaking about their finances day to day, is that most everyone wants to discuss the how, right? How to become rich, and they're chasing returns. Oh, I just talked to somebody the other day. I was like, well, I'm going to buy this crypto and they say it's going to go up next year. And then I'm going to sell out, and then I'm going to do such and such. And, but I said, well, what do you want? Well, I want financial freedom. Well, financial freedom is a capability and it's a cash flow. So are we focused on cash flow, passive income greater than expenses? So, but here's the thing. No one wants to admit that they have no capital. What do I mean by capital? Money. They have no savings. They have no liquidity to even accomplish the how if they could figure out the model. But let me take it a step further. What becomes before how? See, Simon Sinek's great book start with why. Okay. What do you want? What does winning look like? What does financial freedom feel like? How would you feel? How would you know you're there? Okay. Why? Okay. Is it freedom? Is it to people talk about building generational wealth, but that's last. That is a worthy goal, but there's a you can't start out with that goal because you don't even have any capital to do that. So uh you have to so it's why, then how, which is the plan. Most people don't have a plan. And then the last thing is what. So what is a tactic or implementation? So I just want you to think about that as we go through the 5 laws of gold. And I'm going to cover that right now. And so let's talk about the 5 laws. Okay, so I've kind of written them in what I call contemporary English. One is I'm going into Richest Man Babylon because people miss it because it's written in, for lack of a better word, King James prose. So King James Bible, the Bible prose, right? And so the first law of gold is start saving early. Okay, so pay yourself first means to save. Now, what people do is they kind of distort that. Like the first time I read Richest Man in Babylon, the person that taught it to me, we used to call him Wall Street. So he was in the stock market. So he interpreted that through the lens of, what most people do, that focus on what I call the accumulation theory. What is that, Curtis? You say buy and hold, dollar cost average, get out of debt, buy term investor difference, the S&P, indexing, all that, index funds, all of that is what we call the accumulation theory. And so accumulation is not the way to win. It is a moving target. You're saving dollars. You're focused on the stock market, which fluctuates up and down. You're saving monetary unit called dollars, right? But the longer you hold those monetary units, the less they buy, right? So you're not adjusting for inflation. And then third, most people are storing their capital in qualified plans, and you're not adjusting for inflation. You're deferring, or a better word would be postponing taxes. And then when you take it out, you could be in a higher tax bracket, not lower. Okay. And taxes don't go down when you turn 65. Just saying. Second, right? So you got to pay yourself first. Now, I'm not going to give you the how to do that, but I'm going to give you the why. But I don't care I don't care if you make 30 grand a year. Oh, Curtis, you don't understand. I've got bills. Part of all you earn is yours to keep. So you've got to figure that out. Okay. Now that's kind of what I do. See, most people kind of know what they want to do. They don't know how to save, so to give you some basic strategies to pay yourself first. And you've got to but first of all, it's a decision, Paul. So if you make $1,000 that week, could you save $100 of it, or $150 of it? Well, that's 15%. So you could do that, but the key is you have to do that first. You can't say, well, if I have any money left over, I'll save it. No, you've got to open up an account that we label wealth capture, and you've got to literally put that money in there or make it direct deposit. But let me talk about savings. Let me define savings. Safe, liquid, accessible, guaranteed. Okay. So when I say pay yourself first, I don't mean fund your 401k, because that's not savings. Even though the literature says saving for retirement, you're not saving, you're investing. And I can make a strong argument on another video that you're not even investing, you're really speculating. Okay. So the second law of gold, did I step on some toes there? So the second law of gold is control your expenses. You have to see, how do you save? You have to measure, you have to control your expenses. You got to spend less than you make. And so we teach a system called cash flow mapping, where you can begin to organize your cash flow into different financial buckets or accounts. You have a fixed account, you have a variable account for fluctuating expenses, and then you have a wealth capture account. So you pay yourself first, you lump your bills, and I'll show you an example of it in an account for your fixed bills. You've got certain bills that are the same in timing and amount. And so what you have to do is you've got to organize that. So folks, you got to get control. See, if you can't, somebody said, where did I see this? Was it Rich Dad Poor Dad? If you can't control your income statement or your budget, somebody will always control you. All right. And that's what you've got to control. So I don't care about investing. I need you to organize yourself and get control of your personal economy. The third law is make your money work for you. So what do you do with the savings, right? Well, you got to create velocity, which is buying assets. What's an asset? Something that puts money in your pocket. So you've got to learn investing is about becoming something, now about buying. And so you've got to invest means to cover fully, right? So you got to understand it. And so, our three rules of investing: invest in what you know. All right. Invest in what you know, invest in what you can control, which you can influence the outcome of. Does it cash flow? Which means you're getting your money back. Okay. Critical, right? Buffett, people that you study them. They want control. They're not giving their money up for 30 years and hope it works out. Nobody does that. And so that's what you got to do. So now that takes time. Becoming is hard. It's a transformation. And so you've got to transform what we call from economic childhood, where you're dependent, you don't know anything, you're dependent on fund managers, on other people to help you make financial decisions, to economic adulthood, where you are in control of your personal economy. You're a master of your money. And that's what we've got to learn. That's hopefully we're trying to share with people, in the, in our process. And then the fourth law of gold is guard your investments, protect your investments from potential losses. Do thorough research and due diligence before committing your money. Do you do that? Okay. Diversify your investments to spread the risk. So when I talk about diversification, I'm not talking about, buying a bunch of stocks. To me, that's shuffling the deck chairs on a Titanic. So you can diversify through asset classes. What do I mean, Curtis? Well, there's 4 different asset classes: business, real estate, and there's probably 15, 20 different ways to do real estate. So you got to figure out what you like, hence becoming, right? Paper, still remember your emphasis is on cash flow. So what is paper? Well, I already do paper. I've got index funds. I trade. Yeah, but paper is, we have clients that do private lending. We've got clients that do life settlements. We got clients that do, what are those things called? Notes and tax lien, that kind of stuff. That's all paper, but you've got to research that. Reads are paper. I don't love reads, but real estate investment trust, but you can, you got to do your research and figure out what works for you. You can buy individual notes, you can buy a fund of notes, but the emphasis, what you want to do is you want to learn now, not 30 years from now. I want you to learn how to get checks coming in now, so you can get out the rat race in 10 years or less. Okay. And so that's the fourth law of gold. Is guard your investments. And then the fifth law is increase your here it is, sorry. Increase your earnings, right? You've got to increase your ability to earn. Well, how do you do that? You've got to, so your number one investment is you, right? So you got to continually improve your skills, your knowledge, which will increase your earning potential, because money follows value. So if you don't make the money you want to make, that's because you don't have enough skills to trade for it. So, Jim Rohn used to say, don't wish it was easier, wish you were better. Okay. And you have to get better. You have to, and are you working at getting better? Are you reading 12 pages a day? Do you have a line item in your budget for the courses you're going to take, the masterminds you're going to attend, the 12 to 24 books or audio books you're going to read or listen to this year? That's, the journaling you're going to do, the money experiments that you're going to try, because God's activity produces knowledge. Knowledge does not produce activity. And so what happens is, personal development is huge. So, and how do you increase your earnings? What do you invest in? Your mindset, your skill set, and your network, because your number one asset is you. How do you grow your investment? What's your number one investment? Probably your business. So everybody's looking for stuff to do outside their business, and they got room to run in their business. There's a book I'm reading right now called Exodology. So where is the $1 million or next $1 million hiding in your business? And so before I look at other stuff, it's like, wow, I got all this stuff internally that I can do that without any putting out any dollars, just or not much dollars, just thinking differently and exploiting the assets my business already have that I'm not, because you get caught up and you're tired. You have assets around your house that you could put out there. So we're going to talk about that. We're coming out with a course called the Triple Your Cash Flow Challenge. And, you want to work on how can I make more money? So if you like stuff like this, I invite you to listen to the next video, subscribe to the Practical Wealth Show podcast in our YouTube channel here. And if you'd like a free report, you can text on creating wealth. See, so when we talk about make your money work for you, that's velocity of money. So if you'd like a report on that, text P Wealth to 55444 and check out our listen to us on the podcast. And you can also go to practicalwealth.net and take a look at some resources that we have on our site. You can make an appointment with us if what I've said intrigues you a little bit. And guys, go out there and make it a great day.